All right. Hello, Les. We'll be getting started here shortly. Hello, Mom. Good to see you again. We've got a day full of good information. Rich, good to see you. Lal, thank you. Maria. Richard, happy belated birthday. Elizabeth, thank you for joining. We'll be getting started here in just a quick moment. Right. And all right, let me get us going live and then we'll get rocking and rolling here. So let's go. And here we go. I don't know about everywhere else. I know I asked last week, but it is pretty warm here today. I don't know about for everybody else. But Brian, we are live on Facebook. Thank you for joining us for weekly sessions this week. I greatly appreciate it. How are you doing today?
I'm doing well. How about yourself? You're in Dallas, Texas.
Oh, you're used to the heat then, so I really can't even complain, so never mind.
Yeah, it is pretty hot.
It's not like it's in Washington or Oregon where it's been like triple digits and any of that kind of stuff lately, right? Um, so this week we've got some great information coming up. Thank you so much for joining us to help share some insight. We started talking about this a little while back, and I think one of the areas a lot of people tend to have, I want to say, some difficulty, or it just doesn't always happen right away, is that book to tax adjustment. So I'm glad to be able to bring you in to kind of talk about more of how that works. And why don't we jump in here and we'll get started with our presentation. You ready?
hmm
All right. And for the question for today, I would love to hear in the comments from anybody if you are planning any kind of a vacation, actually 4th of July plans. Any 4th of July plans? What is everybody planning to be doing? And I should also say happy Canada Day to all of our friends up north. Today is Canada Day. So let's get this going here. So, Brian, and just actually, what I'd like to do real quick is you and I have met a bit. Would you please actually introduce yourself? Tell us a little bit more about your background, your firm, what it is that you do. Give us the download.
Yeah, thank you. So I have this on my slides too, but the way I started as a business owner was I was in youth sports. I would run basketball tournaments. I'd have club teams. There was an academy. We'd have camps and things like that. So I would do that full time, and we grew that pretty big. And I did that out in San Diego. And as we got bigger, we were really good at bringing in revenue, but which I call offense, right? But we were not very defensive, which was defending the bottom line. Just to use I'll use some sports analogies. Obviously, that's where my background, but accounting was kind of a weakness of ours. So the last few years, I got a mentor. I was lucky to have a mentor, and I said that's my pedigree. He's been doing it for 40 years. I thought he was very good and impressive, and I learned a lot from him. I started doing bookkeeping. I got certified through QuickBooks, and I was off and running. So, and now I am doing the enrolled agent side. So I see both sides and using ProConnect for that. So my
Nice.
practice is bookkeeping, tax, and payroll, like most people here, most likely are.
So now I do not do any tax at this point in time. What's the makeup of how many like tax versus bookkeeping clients, if you don't mind me asking? Do you do?
Yeah. Well, so yeah, there's like some overlap. So the cool thing is like a lot of my bookkeeping clients, not most naturally, like their books are done. I can do their tax return and they like that. And I have some, people that are just want a 1040 individual tax return. So my tax return business is newer. So I have, I would say I have about 40 recurring solid lists of bookkeeping clients, and
Nice.
then I'm newer with, and I just like to be like a lot more selective, and I've just been like keeping it at that good number. But yeah, tax returns, let's say half of that for now. But and then I'm going to talk about this in my talk, the integration between the bookkeeper and the tax person. I know everyone here probably, I have most of my clients, if they're not with me, they're with a specific person that I refer to. And because we work great together on the back and forth, we're integrated together. So I stay away from those because I referred it to him, and we have a good relationship because he sent me people for books. So that's just a great relationship. And I kind of want to talk about that a lot because I think that if you have a great tax person, I always felt bad if I couldn't. I always, when I couldn't do the taxes, I always wanted to at least help them find someone, or at least they would ask me a lot of questions about the books. And I never really wanted to say, I don't know that, ask your CPA. I wanted to either help find the answer. So as I kept doing that, I was like, well, let me just at least, it just made me a better bookkeeper. And that's really the kind of the focus on this, is how understanding the other side of it will make you a better bookkeeper, as I imagine most people here are interested in.
Beautiful. Well, thank you for the introduction. We have just a couple quick questions from the group that I thought you'd be able to chime in on to as well, just kind of some insight. And then we'll jump right into all of your topic for the majority of the time from there. So I'll share my screen here real quick. So our group questions, again, just a couple quick ones here. One of them was, what are you using for team mileage tracking that somewhat talks to QBO or QBO Advanced, really? Approval levels would be awesome to have. Any workarounds to have T-sheets, aka QB time, approved timesheets display the employee's signature and approver's name and signature on the reports, or is there an alternative app that you recommend? So now I've got some insights onto this, but do you have any of your clients that you're using these expense tracking, mileage tracking type apps? Anything to?
Yeah, I mean, I think the QuickBooks one is good. That's what a couple of my clients just use the QuickBooks tracking for that. So I haven't seen the other ones, but that one seems great to me.
Have you had any, for your clients, do they have any employees also using it? Or is it mainly like the business owner that's using the mileage part of it?
You know what? No, I mean, I've seen some clients use things for like expenses from employees, like an Expensify and things like that. But I don't know if that does mileage. I like Expensify and the integration. That's worked well. But to be honest, I think that is something that I would like for my clients to get better at, that their reimbursement systems. There's a lot that, they just don't have great systems for that. And it's something that eventually I'd like to focus on getting better at. So I'd like to hear your thoughts.
I've played around with the mileage app, like you were saying, the one that's built into QuickBooks, and we're in the process right now of helping one of our clients set up Expensify. They'll be adding in expense reimbursement for mileage, but it doesn't do the mileage tracking the same way.
Yeah.
So now, as an enrolled agent, obviously kind of two different things, right? You have a business a business owner who's trying to use a vehicle, and they need to be tracking mileage to make the difference of personal versus business in comparison to an employee who's being reimbursed for mileage. Do you still have to have the same mileage log for an employee the same way?
Well, this is what I would like to say, and hopefully there's no IRS agents on this call or not, Matt. But there's the actual tax law, and then there's the application of what's practical. And if you follow all the stuff on the tax law, it's impossible. Like it's not practical. Like not everyone's going to just, all right, I did my mileage. So to be honest, I mean, it is great to have that. But for tax purposes, I think the best way to have a mileage tracker, or to track mileage, is if you are driving more than average, because you have to defend, if you would have to defend against a certain, let's say you're saying most people probably drive around 12,000 to 15,000 miles. And then you can kind of see, okay, what's the percentage likelihood? I mean, this is how the tax people usually do it. The percentage of business is probably this. And they kind of do it that way. If somebody said, hey, I drove 35,000 miles this year, you would say, okay, I want to make sure we can defend this, right? So I think it's something more, that's what I'd say from the tax side. If it was, it's the stuff that is kind of the things that would jump out on a tax return, I think you better really have a defense for it. I hope.
I love it. As I always say, if you're going to push the boundaries of something, pick one boundary to push, not a whole bunch of them. So in that kind of scenario, if you're really there is technology you could be using. Regards to the T-sheet side of it, you can add in language that basically, as the employees are submitting their time, it would be written approval that they are agreeing to the hours, but it would not have an employee signature. I have not found a way for that, but this is a great feedback because this is really needed for construction, anything where you have multiple workers' comp codes, all that type of stuff. This really becomes super important during that audit process, I would assume. So, and then the last question we were going to ask real quick is I have a client who went from QuickBooks Desktop to QuickBooks Online recently. She says she's going through her transactions and it appears everything was doubled. Now, seeing something like this, there could be a lot of different variables, and I always like to try to make sure we're getting some answers for the group itself. I would think something like this occurred most likely because they pulled everything up, right? Hopefully they did all the reconciliations in desktop, made sure everything was legit there before they did the move. But then if they did the bank feed connection and somebody started like just accepting things like crazy, that would be really one of the only places I could see that it would be doubled. What do you
I wanted
think?
to ask you this, Matt. I forgot to. I remember you were asking about recommendations that you were going to bring to QuickBooks, and I forgot to put this in. Why does, and maybe they do have it, but why can't you do a batch deletion of things where you saw a bunch, like you want to just delete, you can reclassify things fast. Why is there not like, I want to delete, there's got to be probably a reason, but hey, I have 100 things that are duplicates. Can I just hit delete? You have to go through each one individually, and maybe they're scared that you might be like, oh shoot, I didn't mean to do that. But
Great question. I mean, there are third-party applications that you can utilize to do a lot of this stuff, of course, right? And what's nice about that is it puts it just out of reach of the normal average everyday user, that they're not going to totally mess up their books. I think might be part of that.
Yeah.
Because
I feel like that's what they might have to do that. They might have to delete each
yes,
duplicate one by one, or maybe, if at least it would be good to do a batch like deletion.
yeah. Now, if in this kind of situation, if they had just moved the company file up, what I would actually do is I'd go straight to the desktop file first, and I would triple check that everything there is in good condition. That
Right.
hopefully they did the check first, but just to be safe, if everything looks good there, I would actually try to push the data again, and it will overwrite the data just
Yeah.
from what you had before and just give it a whole new shot.
Do it again.
Because that may make things glitch, things happen, but that's one of the reasons it's so important. You want to make sure all reconciliations on all accounts are done as far up as you possibly can. You're going to run your balance sheet, your profit and loss, both on an accrual basis. So when you get everything to the cloud, you're going to be able to look at it and evaluate and find challenges pretty quickly. So it sounds like something glitched. And I did reach out to this person. They're still working on it. If it is something where they have to get a whole bunch of stuff deleted, we can use SASANT. There's transaction deleter. I use CData. They can always reach out. We can help show different resources and ways to get that done, of course. So now I want to actually turn it over to you. And do you want to control slides on your side, or you want me to control the slides? What's best for you?
Yeah, if you don't mind to control them, that would be great.
Happy to do it. So we're going to dive in. And again, thank you for taking the time to put together this presentation. This is all information out of Brian's brain, not mine. So I thank you for taking the time to put this together. All right. So you kind of did your introduction, but I'll let you kind of go through it again here.
Yeah. Yeah. So I kind of, I do, when I do the presentation, I kind of like to say like, who am I and why I listen? And one of the reasons is why I like accounting is because I was in basketball and I was really into coaching, and I don't see the word coaching used, but we talk about advisory, and that's where most things are now. So I see it as coaching small business owners now. And I'm a big believer. My thing is I'm a big believer in the fundamentals. I love the fundamentals. And a lot of times I think they solve a lot of problems is the focus on it. And a lot of times people think they're boring, but the fundamentals are what make great organizations and win. As a little story on basketball, One of the best coaches of all time, Phil Jackson, was coaching an all-star team. And the story was, he had Michael Jordan, Magic Johnson, all these people. I think you got an autograph by Magic Johnson recently, right,
I
Matt?
did. Yes. Yes.
But you would think that their practices would be all intricate, but the people that were watching it, they were working on passing and catching, basic footwork, and the best players in the world. So it's like I would always say, if that's what they're doing, why would you not be doing that, right? And it's usually so. I'm really big on the fundamentals, and I don't think there's anything more fundamental than a business's books, and that's why I love it. The books are the fundamentals of the business, and that's very important. So, and I have a picture kind of these two players that I had that I'm really proud of in my team, where I saw in the picture on the left is when they're in eighth grade when I coached them, and the player on the right is in the left in the picture, and then his name's Jalen Hands. He was a McDonald's All-American, went to UCLA, got drafted to the Brooklyn Nets, and then Reed Farley was got a scholarship and got to play at Harvard. And these guys, they knew where they wanted to go. Like Reed said, I want to play. He knew in that picture on the left, like, I want to go to Harvard. So that's kind of how I see it. And like, I really enjoy working with business owners that say, I make 100,000 now, but I want to make 250. And I like going in backwards engineering and say, okay, well, if you want to make 250, let's work in reverse and, go that way. So, BSH accounting, again, is kind of taking what I learned from coaching people at the highest levels and bringing that to my accounting and my advisory practice and my pedigree. Like, it's very important who you learn from. A lot of people are learning from Matt or the different things. It's like, and I got to learn from amazing coaches, but I also had a really, really good mentor who was a tax advisor. So, and is 40 years ahead. So I'm 36, but anytime obviously, if you can learn from somebody 40 years ahead, it's a really good, it's a good thing. So, the pedigree is important. And the last thing I always say on my talks is if you can just, hopefully everyone here just focus on one key detail. Like anytime you go into a talk, see if there's one key detail that could possibly change how you do things or change your life. It's not, you're probably not going to remember much, but if there's one key detail that you take away from this that changes how you do things, I think it's a success. So
I love it. Maria in the comments did ask, was Larry Bird on that team?
yeah, I'm pretty sure it was like the dream. It was like everyone,
Yeah.
it was like every name you could
The
possibly.
dream team, the real dream
Yeah,
team.
it was
Right?
just like, or, I maybe not, Phil Jackson might not have ever coached Larry Bird, to be honest, but, it was like, all the top players. And it's a good question. I love Larry Bird, obviously.
I'm a Kobe fan, Kobe Bryant fan. Anyways,
Yeah, talk about a guy. I mean, going back, Kobe Bryant, him and Jordan, masters of the fundamentals. They would drill the fundamentals. No one drilled the fundamentals. Very fundamentally sound players. So, yeah. So, my question here is, who is the reader? So I was thinking about this. The books are, when I analyze a tax return, when we analyze a tax return, you put on three hats. Like, who is you put on a hat from the client's perspective. You put on the hat of the IR. If you're doing it the best way, like, what is an IRS agent going to be looking at,
okay.
right? And what are you, and from a client's perspective, and then kind of like our perspective as a firm. And there's kind of your books from a, hey, I just want to do my tax return and do my books, and there's compliance, and then obviously there's advisory. It's like, okay, I have my books done, now what? And the reason why I really think obviously advisory is best is because advisory accomplishes the compliance by itself, but if you just do compliance, you're not getting the other. So, it's really important to have, why do you want to have great books? There's so many reasons we know now. It made it easy for the PPP. It made it easy, if somebody wants to get, a mortgage, having the books are there. It's like, who is the reader? Who are you presenting this to for the quote unquote annual sales pitch to the IRS? Or are you, presenting this to a lender? Who is the type of reader? And that was just something that was a lot on my mind. Integration of trusted advisors. So my mentor talks a lot about, like, again, the bookkeeper maybe the payroll specialist, maybe, when you own a business, you want to have this advisory team. Like, let's talk about basketball again. The best players, they have a nutrition coach, they have, a coach for every specific thing, right? And ideally, you want them all to know each other and be on the same page. So if I like to integrate with their trusted advisors. Maybe they have a realtor that needs the books. It shouldn't be a mutually exclusive handoff where we're all competing for the client's business. I think you can add a lot of value. And that's why I kind of picked this topic, because the more you know about the tax return, and going back to basketball, you want to see what the next level of what your work is. So if you're preparing a high school player for college, the better coach will know what is the college coach looking for, so you can better prepare the high school player. It's the same thing with this. Like, if you're preparing books for a tax return, the more you know what they want to see is going to make it so much better, and your clients are going to be it's going to be a separation, I think, because if you're willing to integrate with a enrolled agent or a CPA.
Yeah, I think there's definitely an aspect of it that when you get into bookkeeping, there's a certain aspect of you don't know what you don't know, right? So sometimes it's only through the experience that you are able to really start to see that bigger picture to help prepare them for that next level sometimes. Mm-hmm. So always just continue your education, continue to be learning so you can become that role as that a trusted advisor. And most important is, if there is something that you don't feel comfortable with, I don't know is always an acceptable answer, but let me find out. Follow up with that, and that's, that way they can always trust the knowledge that you're providing with them.
Right. And it's great. I mean, everyone here has to do their own tax return too. So the tax return is really cool to understand too, because it's going to, like, again, these are inevitabilities. You're going to have to do them every year. And the better you get at it, the better, like, you could be saving money in certain ways and giving better advisory, because a lot of it is, it's just like, I want to make the tax return anticlimactic for the client. That's the goal. Like, it should be anticlimactic. If you're working with the client, it should be, okay, January, got your 1099s. Let me see the W-9s. It should just be kind of anticlimactic is the goal, right? No surprises. So I did a chart just as a fundamental chart. So interesting enough on the entities. So a sole proprietor, if a lot of you probably have these sole proprietors, their tax return is going to be on the individual tax return, which is a 1040 in America, right? And they're going to be on a Schedule C. And I've showed these forms. You've probably seen them before. So and if they're a partnership, they're going to use the form 1065. Okay. Now let's talk about LLCs, because this is a very common mistake. So when you make an LLC, someone makes an LLC, let's say on LegalZoom, they say, great, I have a business. It's the start of them protecting against, separating from them individually to a business legally. But the LLC, if you just form an LLC, you get no tax advantage whatsoever. You default, what's called default to a disregarded entity. So if you sign up an LLC, happens all the time that I see, they are going to default, if it's just one per single member LLC, to a 1040 Schedule C. And if they have more than one member, they're going to get that 1065. So the LLC is that like hybrid where they can do what's called a Form 2553. And I do this for clients all the time. They can elect to be taxed as an S corporation. I can get more into that. Or you can be, so if you're an LLC, you can either default to be anything really. You can be an LLC taxed as a C Corp. So if you are a single member, I put there 1040, your Schedule C, multi-member 1065. And when you start a corporation, you default to a C corporation. There is no such thing as like signing up for an S corporation. Technically, you become a corporation. You are a C corp, and then you elect to be taxed as an S corp, just like an LLC. Do I have any questions on that, or does everyone already know all this?
Please feel free to add the questions in if you guys have them. I'll be happy to pass them through. quick question I would have is I know that nowadays I believe a new B Corp is something that people are starting to look into as well. Are you familiar with the B Corp, and what's like the 5,000 foot overview of
Yeah.
what that is?
So I don't have a couple on here. So I don't have like a trust return, which is a 1041, and then you have like amendments, which would be like a 1040X or a nonprofit 501c3. But then you have this B Corp, which I don't know much about. But what I do know I have a client that was interested in becoming it. And I think it's like, you are focused on a percentage of your like you run, I think like a corporation, but you do, let's say 5% of all your profits go to some sort of foundation or something like that, where you're operating for a certain amount where you can apply for it. But as you said, Matt, I would default to
It's
that. I don't
newer.
know, but
Yeah.
I've heard of it, but I've never seen someone actually have it. So what I just kind of wanted to do here, and this is like one of the first things I wanted to separate on, because this helped me as a business owner, is seeing, if you look at line 12 and line 13. So this is an 1120. And I just, ever since I saw this, I always do this in my books, because I asked, what's the best way to do it in the book? So I have a payroll expenses. And as you can see that there is a compensation of officers. So that's the owner. And then there's the salaries and wages. So if an owner pays themselves $36,000 and they paid their employees 100,000, so their total payroll salaries would be 136. This is how it goes to this form for a corporation. So it's the compensation of the officers and then the salaries and wages. Okay. And I remember being at one of my clients with my mentor, and we saw that the tax person, the client paid himself $72,000 W-2 as an S-Corp, and box 12 was blank. So we amended that. And not only did that one mistake happen, he overpaid like 20 grand in tax. So we got him that back with an amendment, and it messed up all of his estimates. So, I like to put it how it is on the tax return. It's just fascinating. I think the tax return kind of intimidates people, but if I can explain some of these things like, repairs and maintenance, that is a QuickBooks, default. There's some things here that are defaults. I did notice, Matt, that I think Advanced changed a lot of them recently. I saw like chart of accounts defaults are all different, which I didn't really enjoy, to be honest. But
I
I
don't at all.
I did not enjoy that. But there's things, for example, like things that I could talk about here, like let's say a corporation or LLC or something, they make a charitable contribution. You might have that in their books, but that's not going to, this is for a C-Corp, but for an S-Corp or LLC, contributions are not, they pass through to the personal. So there's certain things like that, like medical and charitable, where technically they really shouldn't be on the profit and loss, because if the taxes, they don't go on that business form. So,
I think that's where some people use like the other. They'll try to separate that down into other income or other expense area,
yeah.
right? So it's
Yeah,
not.
and interesting enough, as most people here know, like I sometimes like to put in and change these categories, because meals, like you have meals and entertainment. Well, with the tax cuts, it's more so business meals, and then you could put like in parentheses 50% deduction, but now it's 100%.
I was
I
just
would
about to
put
say that. Yeah, yeah.
So I would put like, for the PPP, I'd put that in other income, and I'd put in parentheses non-taxable,
Okay.
like certain things like that would help improve the client's intelligence of the books too. On a tax return, it's almost always better. Like it's kind of funny. Like if you can put seminar costs subject to IRC 5.23 code 4 section, that's actually a better way to list it on a tax return than just, I've seen, I was watching a funny tax Twitter. People were talking about there was the things that they've seen on tax return, like they had an ask my accountant on other expenses, which was hilarious to me. Or like I've seen uncategorized expense be on the tax return, that
On the
the
tax return.
preparer just was lazily took like a books, right? Or like would put it on, right? They're just
Wow.
transferring the books to tax and just being lazy. But certain things here like advertising, I know QuickBooks has like advertising and marketing. You've got line 22. It's just, this is for the corporation. You've got, your interest, rents, pretty straightforward there. Um, yeah.
Yeah, it's difficult. I wish we could get the government and the business owners to actually agree on anything, because there's so much more context and information we generally want to
Yeah.
provide business owners, right?
But
So that,
I can show you. Oh, sorry to cut you. I'll show you where that comes in because, to be honest, between all of us in this room, the more you can kind of, in a way, like I said, the tax returns, joking facetiously say the tax returns an annual sales pitch to the IRS.
I quoted that
So,
actually. I love that. The
uh,
annual pitch to the IRS.
so these boxes are very scrutinized technologically. So, for example, they have all the data on box 22 for the NAISC. Let's say advertising, they know contextually what would stand out when you hit these boxes. So, I'm going to talk about where the other, if you can avoid, I'll tell you where you can put the other expenses that, that most of you, like storage costs or something like that. That's not going to be its own box.
So
Or
real quickly, because we've got, so in the Facebook comments, so we've got Kelly Hollis is asking a question, and she was asking, is there still a benefit to paying charitable through the S-Corp and claiming back somehow on the K-1 to save on the personal return? Someone told me this was a way to save taxes.
So the S-Corp, it all depends on the fact on your personal, are you itemized deduction or are you standard? I read a quote that 89% of America is taking the standard deduction. So if you are taking the standard deduction, until last year, you get no benefit for charity. There's no, you go to Goodwill, any of that stuff, you're not getting a benefit from it. However, you get $300 in 2020 of cash donation, and I think 600 for married. So most people are taking the standard deduction. If you are itemized deduction, you most likely, you could pass it through, or it's going to go in the charitable contributions on your personal. So
Okay.
it doesn't, for S-Corp, the S-Corp. So when I talked about pass through, right? Like you've got your sole proprietor, which is like the same individual tax return. And it makes sense, right? Because the sole prop has no real difference between like the business and the personal. But when you have an S-Corp, you have a separation of an
Yep.
1120S. The K-1 then goes to your 1040. And then you have you have a different tax return for it. So I hope that answers your question. So for the most part, technically, I mean, I guess charitable contributions in a way is contextually is kind of a swear word, right? So it's like, can it be moved over to contextually? Can you kind of move it over to advertise or something else, right?
Interesting.
If it is closer to that and it was an ordinary and necessary expense, and then it is deductible. So it's
You will
contextual.
talk to your qualified tax professional who's going to know your scenario best for you. So double check with them specifically, right?
Yeah.
So, all right. So we've got basically our other schedules here, I
Yeah.
believe.
Yeah, and I'll just go basically just to kind of, just to break it down real fast. I don't know how much time we have, but the line one, the Schedule L on my EA test, which I remember this. She says Schedule L is always going to be is the balance sheet, and the balance has an L in it. And I don't know, she said it, and I just remember it. So balance sheet is Schedule L. The cash is going to be when you reconcile all their checking accounts and stuff. That ending. That's where that 1231 most likely your ending cash position is going to go on that line 1D, and that's really the book to tax adjustments where you're getting into that. Or is going to be this 10A and 10A where you have their assets. Let's say you have a car is usually 5 years. Let's say a car is 5-year depreciated. So let's say you buy a car for $10,000. Each year you're going to get $2,000 as an expense. So that would go over to line 20. So that will flow over to line 20 on that first page. And then, you could do the adjustment as that depreciation expense on the profit and loss as a adjusting journal entry. That's where those, those non actual, you're actually not coming out of pocket for it, but that's where you could get get the books better for that. So, and then you've got the sole prop in the Schedule C has no balance sheet, just so you're aware. So there is no balance sheet on a tax return for a sole prop. So that's interestingly enough there. But on the S-Corp and C-Corp, you'll have this, and you got your loan. One of the main ones probably be like loans from shareholders. I do like a due to shareholder in my long-term liabilities for most clients. They're loaning the company money, right?
Yep.
And then you've got your actual Schedule M1, which is this is the reconciliation of the books to tax. So what happens is certain things like the last question, the pass through, or let's give an example. So when it was 50% travel and entertainment, as you see, like C, you would have to reconcile the fact that your books say, let's say your client has $5,000 worth of meals and entertainment, but on the tax return you're getting 2,500, so that creates that other 2,500 off. So that's where you reconcile that type of stuff. So then it says, the book, that's where there's like a reconciliation. And then on the S-Corp, there's something called an accumulated adjustments account. So that's how much you're taking in, and not to get too heavy, but these collection of accounts over the years of adding up everything. So yeah, I just kind of want to break down, just because it helped me to have someone, there's just a lot going on, right? So it's like, if you really start looking at it closely, you will understand it more. You'll start reading stuff, but there is a lot going on in all these forms.
Very, very helpful. Thank you very much. Okay, so Schedule C now, right?
This is kind of a common one and this is what I wanted to talk about is, you have kind of a different format here where you have, let's say, office expense on 18. What you'll see is that the business, the home office is line 30. And what I like to do sometimes is you get, there's called the simplified version, which is basically 300 square feet. And it's just kind of like the standard deduction for home office. It's a $1,500 deduction there. And that's line 30. Yep. And then you have your net profit and loss will be line 31. I think probably some of you got to be familiar with this if you're helping with PPP. They were going off that line 7, that gross income. You probably got familiar with a lot of people's on this if you were looking at the PPP application. But so this is on other forms too, but you've got your part 5, part V, the other expenses on the other form. That's where you would put these other categories that you guys most have for the different businesses. So other businesses have different ones, and maybe it's professional affiliations or, seminar costs or certain things that are not on these classic boxes. So some of these boxes are more scrutinized, and I'll tell you which ones on the Schedule C. So 24, travel and meals. If people on A get too excited on that, that's very common, or these meals, if these stand out, one of the little tricks, I guess, to say would be, let's say you traveled $5,000, as your travel's $5,000. It might be better to put it like 2,000 there. Actually, you never really want to have like 2,000. That's obvious, right? If everything has the even number, it doesn't sound believable. And 2, can you break out the 3,000 into business airfare, business lodging on these other expenses? I think that's a better presentation and using the English language, like not having uncategorized expense here, or I've seen like very lazy things here. It'd be best to be like, software expenses. So, if you can't, very better, that's one of them, right? Software subscriptions.
So bad mistakes should not be on there.
Yeah. Bad mistakes. Ask my accountant, uncategorized. Oh, reconciliation discrepancies should not be on the other expenses. Somebody else on tax Twitter said they've seen that before. So, and I think I have seen that too. So yeah, you usually always see kind of funny things when you look at tax returns. Interesting, but and then you've got your cost of goods sold if it's a product. So yeah, that's the Schedule C is a very common one to see, but it's really good to be familiar with. You just even looking at the words that they're using. I like using that on the books, because then you're making, you really are. And I will talk about this on another slide on what is awesome is that there is a tax mapping. And most of you haven't seen this, but if you go to the prep for taxes on the top left in your QuickBooks Online accountant tools, so you've got Pro Connect Tax Online, which is on there, and then you've got this, right? And so you've got these year-end tax, but you can see also here like how close you are, and then in the tax mapping, you can see, okay, go down here. It's got 1A. That's the line that it will go towards, and you can edit it. And this is something that I do since I use online, but I also use Pro Connect. I can click a button and it might not be perfect, but it's at least a really good start to the return. And it starts me off, and it's really cool. I just think it's an awesome tool that I think desktop had this too, but I don't think it works with other like tax softwares. Like there's one called CCH. They're not capable of doing this. So I love Pro Connect because it's the only one that's really in the cloud. So I'm really using both of these things together, but you can see how they there's the mapping is really cool, and it's just an interesting thing for you guys to check out that to learn this side of it if you want to poke around there.
We did an episode just a little while back that we were talking about some of these features that I'll try to go grab the link for that one that people can go in and see the whole prep for tax different functionality, because we kind of reviewed each of these. You're right. It's something that's newer. They've been putting a lot of energy into. So
I think the documents one is really cool. I haven't really used it, but like if you look at the documents on your screen, it could be really a nice portal for some of these statements that you're like, if you go to documents, it has it broken down by your chart of accounts, which but obviously, and going back to books, I'd say chart of accounts is my favorite fundamental. That's you got getting that right. That's probably my key detail is like chart of account management, because that's where you're doing budgets off of it. If you get that right, you're right there. So that's the fundamentals of the chart of accounts I'm very into.
good point. As we're getting a little bit closer time wise here, I always like to be cautious to make sure that we get
Yeah,
people.
that's my last really my kind of last slide. So if they want to do any questions or anything like that, I'm
Beautiful.
happy.
So let's see here, as people have questions, please feel free to ask them. We're watching it. My favorite miscellaneous. Okay, so Tanya was saying miscellaneous, uncategorized, other expenses, general business expenses. Those are all ones that
Yeah.
she would see all the time, basically.
Yeah, follow hashtag tax Twitter. It's actually really funny on Twitter. I was going through that laughing.
And then, so Ernest was also saying one use case. So Ernest in Facebook was sharing his AHA tool, which is mapping lines multiple ways. That's in the Facebook Live. People can go check that out, of course. And then Megan Morel is asking, is it time for playing the guitar?
Oh yeah, in the background. Yeah, it's just a prop. I'm not very good at it, so thank
Better
you.
than me. Better than me, that's for sure. So, all right. So we were already talking about some of these details. I've got some additional information that I'm going to save until next week, so we can be sure to take more time to answer people's questions. Let's see here. So Francis was saying how the bookkeeping and tax connect. Loving so Francis was saying great material, again, how these two pieces play together. So loved it. Great job is what they were saying. So
Yeah, I saw Tanya asked said something about quite a few folks get most confused by the LLC designation and thinks it affects tax somehow. Yeah, that is a really common one, the LLC. And you know what, in California, and they might be changing this, the very first year of a corporation, you don't owe that $800 minimum. But for an LLC, you do. So I just like I feel like it's like if you want to be an S-Corp, it's like why you shouldn't be an LLC. I don't see the advantage of being an LLC taxed S-Corp. You can, but I feel like the S-Corp does all the job of the LLC. And I usually probably just advise most people are probably wanting the S-Corp anyway.
I mean, if you're not doing taxes in S corp, the whole qualified business income, does that come into play if it's just an LLC with a pass through?
So the QBI is you still get it, but the C-Corp does not get it. So that's the entity, like the C-Corp is, that was one of the other things is like getting cash out of the business. C-Corp owners usually are doing most of their payroll on W-2, and an S-corp you're doing a combination of the distribution and some sort of W-2. So that 20% business deduction, like for example, on that, you get it on that net profit line on the Schedule C, right?
Yeah.
So yeah, that's so you do get that. You do get that as a Schedule C if you're an LLC. But so the thing is, if the reason why people become S corps is the whole thing is because it saves on the self-employment payroll tax. That's really the main thing, is you get killed on self-employment tax as a sole proprietor, partnership, or LLC. And there's many, I mean, we could do a whole topic on this, because if you have like a rental, you don't want to have it as an S corp. Rentals are good as LLCs, but for the most part, yeah, you can elect to be an S corp as an LLC or a C corp. You have the first 65 days. You have to elect within the first 65 days of completing the corporation, or you do it the next year by March 15th. And there's some exceptions to that, but yeah, if you missed it, you can elect to be an S, and I do it all the time for clients.
Beautiful. So your best way to connect with you, best contact information for you, we've got your website, of course. How should people best connect to you, would you say?
Yeah, I mean, maybe you can tag me in the Facebook group, or my email is my name, brian@bshaccounting.com, or on social media, BSH Accounting. I'm on Instagram and Twitter. And then, I'm a part of the Facebook group. So
Yep,
Brian
absolutely.
Hershman, if you want to tag me on anything or direct message me.
Beautiful. Thank you very much again for this information. One thing I was going to do a little promo for is, when you're doing a lot of this stuff, if you're trying to set up a new set of books, Trial Balance Exporter would be a great tool that you can be using if you need to take your QuickBooks desktop, get your trial balances out, and you need to create a new company file. TBX is phenomenal for it, and they just launched a brand new version of it. I'm sure my good old buddy Ernest will put a link in the chat in Facebook for me as well on this. We did a video, we talked about this just a couple weeks back, and it goes right in line with everything we're talking about here. So next week, I'm going to dive in deeper onto Cal Savers. It's a program specifically for California, but there's a couple other states that are doing this as well. And I'm going to make sure people know about it quickly now, and then next week we'll talk more about it. It's in California. If you have a certain number of employees, employers are required to set up retirement savings programs for their employees. Starting next year, employers with 5 or more employees are required to set this up. And we'll go through more of the details next week on like what's involved with it, so forth. There will be more information in this slide deck that you can take a sneak peek, but we'll cover it next week to make sure we get good coverage onto it. So with that, any last comments, questions, thoughts you'd like to add for the week?
Oh, I would say it's for me, but I would say I've heard that not just a couple of states. I read something about like over like 12 states were starting to consider that that sort of the thing that California's doing. So it's going to be relevant for sure.
California always tends to be the one that pushes the boundaries on things like this quickly. I believe, I could be mistaken on this, so you can't hold me to it, but I believe Washington and Idaho were also doing something of this nature. There was like 4 other ones.
Yeah.
But even finding the information on just Cal Savers they've got a great website, but it doesn't tell you all the details. Like I couldn't find the actual legislation that put this into effect.
That might be on purpose. Yeah. Right.
It is California. So, but yeah, we will be sure to cover that. So Brian, thank you again. I appreciate you taking the time and putting all the information together. It was tons of solid information. So everybody, thank you for joining us live this week. And as always, here's wishing you all a very successful week.
Thanks, Matt. Thanks for all you do.
Thank you so much. Bye, guys.